Good evening, folks. It is late in the evening. Uh, it's actually early in the morning, I should say, February 11th, 2022, U.S. East Coast time. And I, I actually, my original intention was to do this video yesterday, and time got away from me and I got busy with some other things, and I didn't get around to it, but I'm doing it now because it is still, well, I mean, in terms of trading, it's not as good a trade idea or trade setup as it would have been yesterday, but it's still worth looking at because it's kind of, emblematic of what happens in markets and that kind of thing. So you're looking at the S&P 500 index here, and you can see we've kind of, fallen off these all-time highs up here and come down. Had a pretty significant drop here, bounced out of here, and the question became, okay, what's going to happen now, right? We broke this low down here. So for all intents and purposes, however it is you want to look at it, we had a lower low. So as we started to go up, the question was, are we going to have a lower high relative to this high up here, right? So what I did was I drew in my magnet zone here, right? And basically what the magnet zone says is it's an area on a chart where you can potentially start looking for a reversal, especially if you drop down to a lower time frame. It really is that simple. It's not fancy. There's, it's something that I came up with. It's my own. It has several different components that allow you to draw the box in, but neither the components themselves nor the end result, this resulting box is anything super or fancy, right? It's just a good way to kind of look at the market and have a sense of whether or not you should start looking for good trade setups, right? So in the same way that you could have in a market that's going up, you can have a pullback, right? When the market is going down, you can have what's called a retracement, right? Which is the same as a pullback. It's just the flip of it, right? So at any rate, I calculated and drew in the magnet zone here. And like I said, it looked better yesterday. This is the weekly, right? So you can see we had this kind of spike down here, this nice hammer pattern here on the candlesticks, and bounced up, strong bounce, right? Got up to here. And then the question became, okay, how far are you going to go, right? Because if it had broken out of here, and it would have had to break it significantly, right? It couldn't just break it like this, right? But it would have had to break out of it pretty strongly before you would say, okay, this has been nullified, and take it off and time to move on to the next thing, right? But what I want to show you guys is, so here, same chart, same thing, same everything, right? But now you see, right, there was kind of this abandoned baby here. It's not quite an abandoned baby, but it's pretty close. That looked like a setup itself, right? But if you look even more closely, you have lower high, and even lower high still. And the reason that I was kind of annoyed with myself yesterday, or today actually, was I saw price set up this way, right? So that it was when it looked like this, right? So it looked like we were going to take off right here. This is actually a high probability, or the kind of setup that I like. Not necessarily high probability. It's actually pretty low probability in light of the pattern here. But it's the kind of trade that I like because it allows me to minimize my risk, right? Which is, at the end of the day, if you're taking any class with me, you know that's the name. That's the true name of the game, right? It's not, oh, let me find the stock or option or crypto that's going to start at 1 and go to 1,000 and do it, this year. That's not really the name of the game, right? As a trader, what I'm really trying to do always at every turn, whether I'm teaching a small group of folks or for my own trading, I'm always trying to minimize my risk, right? To get as much gain as possible for that risk, but first and foremost, to always minimize my risk. And you should be doing the same thing. So at any rate, while this looks like a good pattern to the upside and like it could fly higher, remember the magnet zone is here. So my thinking was, this is, and again, I was taking into account the weekly, right? So you got this, a rally. So you expect this thing to fall off back here at some point, right? So that broader context gave me a way of looking at this and saying, man, if this thing can take out the low right here of yesterday's candle like it did today, that could be the beginning of a pretty nice trade, right? And with your stop up here. Okay. Now let's take this one step further, right? If you drop down into, you take your pick. Let's look at 3 hours, right? Then all of a sudden it becomes possible to reduce your risk even further, right? Now you wouldn't have gotten this trade right here, or you wouldn't have gotten this entry, although that would have been, unbelievable, right? A doji sitting at the top of a trend and a reversal. Oh my goodness. And a very, very small range. But you could have potentially gotten this one. It depends on, 3:30 today. Yeah, you could have gotten that, but you had to have been looking, watching, and waiting for it, right? I don't know many people who would have been, but you would have had, this would have been a stellar entry, right? Because you're talking about the low 45.77 spot 2.3 and the high 45.82 spot 2.3, right? So on a $4,000, almost $5,000 security, risk of less than 10 price, $10, 10 price levels, I'll take that all day long and twice on Sunday, right? Because if you're taking those kinds of trades and there's any kind of higher reward on a per trade basis, if it works for you, that is going to be a winning formula, right? So at any rate, it's not a trade I took, but this is the kind of trade that I love to take. And I just wanted to show it to you guys. All right. Any questions, feel free. Barring that, I will see you guys next time. Take care.